Hello fellow traders, Marv Eisen here from Timeless Dollar Trading Academy. So in today's video, I want to give you some insight into how to capture the most of each day's move. Now, as you know, as we all know, trading is a risky proposition. Most traders trade with a scalp trading technique, and that's fine, but most traders also lose money. So I want to suggest something that works most of the time. Now, the market always tries to hide its direction, hide its intention. And so what I recommend in order to capture the most of each day's move is to wait for a half an hour to an hour and to see where the market tests the intraday high or low during that first half hour to an hour time frame. Now, you have to take a leap of faith and you have to take a guess. But as I said, this technique works more often than not. So here's the chart on Tuesday, February 11th. And I get this information from my trading zone, my tailored trading zone. I take the Monday calculations for Tuesday. And so for Tuesday, resistance was at 6107, support at 6068, Wednesday 6103, 6061, and Thursday 6079, 6027. So you take the previous day's numbers to use for the following day, all right? And so basically that's how the tailored trading calculator works. I know it looks very complicated, but the only thing you need to do in using the calculator is enter the four numbers in these columns: open, high, low, and close during the regular trading hour, okay? So let's go back to the chart. And so here is Tuesday, February 11th. The market opened right over here, and you can see my trading zone, 6107, 6068. So the market opened right over here at 6065. And there was a gap trade. As you know, there are only 6 trade setups: gap, support and resistance, trend, time and price, momentum, and candlestick. The gap is a trade that closes 75% of the time. And the market opened right down here. And this was really a gift, my friends. The market opened at 60.64 and closed the gap. But also, as I said, you want to capture the most of the day's move. So typically what you want to do is wait until the market makes a move to take out the intraday high or low, and whichever one it takes out within the first half hour to an hour, that's the direction the market is going to go. Remember, the market is going to try to hide its intentions, but it can't hide it forever. So here, the market opened down here at 60.64 and tested it at about 10 o'clock, a little after 10, at 60.66. Didn't take it out, right? So we can take our trading zone and transpose it to the low. Okay, I'm going to transpose it, make a clone, and I'm going to transpose it to the low. And I always do this anyway, because in this case, the gap trade was a great trade. And so right over here, where the market tested the intraday low just after 10 o'clock, I figured that the market was going to trade up. Where was it going to trade up to? Well, the transposed trading zone would place it at 6102, but the market didn't quite reach that number, but almost, okay? All right, so basically take the trading zone, clone it to the intraday high or low. The market's going to move in that direction. And this trade was good for, let's see, 60.70 to 60.88 if you got off at the gap. So 18 points, not too shabby, right? Okay, so I'm going to move forward. Here's Wednesday, February 12th. And again, I got my number from the Taylor calculator. The market, well, on Wednesday, there was an inflation report put in at 8:30. At 8:30, the market took a huge dive, but opened right over here, right about over here. Here's the 9:30 candle. Market opened over here. And where was the market going to go? Well, the market put in a low right at the open, and here at about 10:15, tested that low, didn't take it out. So what do? Again, we transpose our trading zone down to the intraday low, right about over there, and we get off. Where do we get off? Right over here at the transposed trading zone resistance, okay? So pretty good trade, right? From here, from 60.36 up to 60.66, so a 30-point potential profit if you know what to look for. Okay, let's go further. That was Wednesday. Now we're on Thursday, February 13th, and the market opened right about over here. Let's see, opened at 60.83 at the top of the trading zone, quickly closed the gap, And where's the market going to go? Well, the market put in a low just right here at 60.71, tested it here at 10.15, 60.72, didn't take out the low. What do we do, friends? Of course, you know we transpose our trading zone to the intraday low because we figure the market is going to go higher based on this candle not testing but not taking out the low. Where did the market trade? Ta-da! Okay, traded up to the intraday, to the calculated resistance at the transposed resistance. You could get off here. I mean, if you were nervous, if you were shaken out over here, that's okay. You still would have made a nice profit. But nevertheless, here's 3 days in a row where the transposing the trading zone, watching for the intraday high or low, and transposing the trading zone to get an estimate of where the market is going to go gives you the maximum return for the day. If you'd like more information on the Taylor calculator, you can get it at my site at timelessdollar.com and just click this link, Taylor Trading Calculator. You'll read all about it. It worked 80 years ago for George Taylor. It works in most markets. So trade safely, use lots of patience. Thanks so much for watching, and I'll see you in my next video. Marv Eisen for Timeless Dollar Trading Academy.